Let's take a look at some information and charts on Bitcoin for Brave New Coin. So there's been a lot of press speculation, media surrounding what's going on in China with mining, Asics, electricity, CBDC, blah, blah, blah. I really don't care about any of it because I don't trust anything coming out of China ever for any reason. It's basically a giant black box. But the good news is what we can look at is the actual on-chain data, which has footprints and evidence for a mass migration, a mass upheaval. And we can explain that through various metrics here. We'll start with block time, which has a 10-minute retargeting, meaning in between the difficulty adjustments, which are every 2056 blocks, I think. If hash rate falls, block times go up and difficulty readjusts downward. If hash rate increases, block times go down and difficulty readjusts upward. Currently, we're seeing basically block times we haven't seen since November 2020. In that they're at 13 minutes. So block times are increasing, meaning hash rate is decreasing. So regardless of whoever's saying anything about China, very clearly, that's your first clue. Hash rate is declining. Now we can look at hash rate as like a fuzzy, imperfect guesstimation in between the difficulty adjustments as far as what's going on. And we're basically 50% down from the highs. Something else that you have to realize with hash rate is a lot of this is based on price. A lot of this is based on mining tech and new miners coming online, old miners coming offline, which miners get electricity costs at what prices. All of this influences hash rate. So it's easy to say, oh, look, 50% hash rate decline, that's all China. Well, price is also down 50%. So that's going to affect this considerably. And it's hard to know which is which, but they both go hand in hand. So the hash rate guess is 50% at least. If we look at the hard data on difficulty, you can see difficulty has been declining really since May this year, had a bit of an uptick. There was, again, some nonsense in China about flooding season, destroying some hash rate. I don't know, right? Who knows? This could just be early people who knew that this stuff was coming with China, and they started shutting off stuff early. And this could be some new miner in Kazakhstan, right? Some mining farm. It's global. Who knows, right? But all I can say is this is what the data shows, and I can trust this because it's baked in now. You can't go and change difficulty after it's happened. So difficulty is currently negative 16% estimated, and that'll get locked in 7 days. This may continue to increase, and the next difficulty adjustment will come slower, as in it'll take more days to lock that in. That's part of how this whole system works. So the good news is we're not seeing some death spiral where 50% of the hash rate's coming off in between a single difficulty adjustment. That would be catastrophic for a lot of reasons in the near term. In the long term, it's not such a big deal. None of this is going to be a big deal, other than mining globally is going to look a lot different in regards to electricity types, solar, wind, geothermal, hydrothermal, whatever. A percentage of China, the regions are going to zero. Allegedly, again, we'll see what that looks like in 3 months, 6 months, 12 months. But the data is telling you, yeah, something's going on here. Probably more than just price, but price certainly has a big impact on this as well. And that's important to realize. Anytime you see anybody talking about hash rate, price is certainly a big part of it. These are the SHA-256 Asics, the consensus algorithm for BTC. Still heavily profitable, even at the current price. Obviously at 60K plus, they were in a much greater profit, and some of these older ones are slowly curving into not profitable, which is another reason why when hash rate drops off, if you're a miner who's sensitive to electricity costs, overhead costs, that sort of thing, as soon as these become not profitable, they have a greater potential of being shut off, right? And this is at 4 cents per kilowatt hour, which is certainly not what you and I get for electricity, but for what a lot of industrial size miners get, at least 4 cents or lower. That's something else to consider. If we bump this up to 12 cents or something, then more and more miners become not profitable to mine. And the likelihood that more of those miners get shut off increases substantially, right? Like, look at all the miners that are all of a sudden not profitable. Some of these going deeply negative, right? So unless you believe in the future, you're going to mine in a bear market, basically, which is what a lot of people do. Not a lot of miners are rational actors, so that's important to keep that in mind as well, because the upside potential is just so great. So there's a lot of factors here, right? It's more than just China, it's more than just Asics. coming to the United States, Bitmain coming to Texas, right? It's a lot more than just that going on. Here's block sizes, which continued to increase. Mega bullish there on scaling. Block sizes increase. Fees kind of exploded. Not something you want to see if BTC is properly scaled. But the good news was we had upside on the ceiling. We didn't have to raise gas limits like ETH did, for example, because fees were like a runaway freight train there. Since that fee height, fees have dropped off significantly. Nothing bullish about that. It's unfortunate, but that's the way it works. We're most bullish historically when fees are highest. This is on a notional USD basis, so that makes sense, but fees are down significantly. So the chain isn't clogged, and if it were, this decline in hash rate would be much more significant for the network as a whole. It's a little bit of a silver lining there, and part of the reason why fees aren't continuing to balloon is the SegWit usage is increasing now over 70%. I don't know if this was blockchain.com. I forget who. Somebody finally enabled SegWit. I don't know if Binance even has SegWit yet. It's only been, 3 years or whatever. Give it the program, people. So the more of the chain that has SegWit enabled, the lower fees in general should be, because it decreases the block size per transaction, enables a higher block ceiling, blah, blah, blah. So it's bullish for low fees. There are 8,400 nodes on BTC according to Blockchair. I don't know why their graphs aren't loading, but most of the nodes are upgraded to their fullest potential, at least close to the most recent versions. Always a good thing to see that. From a decentralization perspective or a risk security perspective, you don't want a bunch of nodes that have old code and old vulnerability potential. Blockchain size, not really something I talk a lot about for BTC. It's increased substantially since 2020, not on like a runaway trend, like ETH or some of these other newer chains that are just multiple terabytes increasing per day or whatever. It's ridiculous. Still pretty moderate at 350 gigabytes for total blockchain size. And the argument for that is, well, a lot more happens on ETH than BTC relative to DeFi and moving things around, whereas BTC is kind of just a one-stop shop for one specific type of transaction. Here's the unconfirmed transaction counts in the mempool over the past year. And this is count. So you can see a lot of that from January to May. Big issues with unconfirmed transactions, and now it's basically back to historic lows of sub 50K at any given day, and this will zero out at non-peak times. So no issues despite hash rate declining significantly in the unconfirmed transaction arena. This would be much worse for fees if hash rate was declining while we had this clog in unconfirmed transactions. So good stuff happening there. The next question, other than what is China doing with their Asics, is what are the miners in China doing with their Asics? And you can look at the 16 different sites and get 16 different answers relative to the on-chain data. This is Glassnodes. Glassnodes is saying miners are selling more than they're holding over the past few weeks, 2 weeks to be more specific. They sold a ton in January. This is, I think his name is Wang Chun or something. Guy's got a ton of BTC to sell forever, basically. And the general gist is you certainly expect to be less bullish when we have this supply overhang being dripped into the market. So the hope is, if price is going down, I want to see a reason for it. This is CryptoQuant, which to me, this outflow looks insignificant. No bearing on price whatsoever. If we look at ByteTree, this is miner's first spend relative to generation. Again, looks extremely insignificant. Maybe you have to look at specifically Chinese miners, Chinese pools versus globally to get a better picture of this, but this looks like nothing, So if miners are hodling as price is declining and they eventually capitulate, that's extremely bearish. If miners are hodling forever, good for them, bullish. But if they ever decide enough's enough, if they're not like, Wang Chun or whatever his name is in China, who sold on the way up, doing it the right way, they're going to bring price down significantly lower if they decide to start selling. So I don't know what the answer is as far as outflows are concerned. It doesn't look to be super significant. Transaction counts down from 366 to almost 200,000 since January. Certainly not bullish for anything, especially BTC. Even if we go 30-day, this just looks it looks like with the last person to use the chain, please turn out the lights sort of situation. I mean, we're headed for 2018 lows in transaction counts, and you can see what happened post 2017 all-time high, where a ton of people decided all at once that BTC just wasn't for them, you know, and we're approaching those levels. So if you're hoping for a bottom, you're hoping that these transaction counts decline extremely rapidly so that we can find a bottom in price. You know, the same is with active addresses, MVRV. If we look at transaction sizes, those continue to increase. So we're seeing a lot of big transactions, but fewer individual transactions, even with fees being much lower. So this isn't really a fee issue. This is kind of nobody cares anymore issue. At least the newer coins, and I'll get to that in a second. Active addresses on a monthly basis down significantly. On a weekly basis down from over 1 million to under 800,000. I think that's 790. So lows historically were around 600,000, basically like the baseline cruising level. If we look at NVT, we zoom in a little bit. NVT has declined pretty rapidly, and anything sub 40 looks like it's entering oversold buy zone territory. We're getting there extremely quickly. This is on-chain activity relative to market cap. So if this is declining, it's easier to get bullish. If it's rising, it's harder to stay bullish. So to see this drop so quickly says we're en route for a bottom, certainly sooner rather than later, based on that metric. If we look at MVRV, again, this is on-chain activity relative to market cap that has been moving. So realized cap, you can see the previous peaks in price were basically a 3x multiple of market cap relative to on-chain activity. We just barely got there on this kind of February high. And any of the buy zones have been sub 1, meaning on-chain activity is greater than market cap. And we're quickly approaching that level. You can see where it hit in 2019, kind of 0.6 is like the ultimate low for this metric. And even in Corona March, we got to 0.7, something like that, 0.76. Currently at 1.4. So we're 50% of the way to a pretty confident on-chain metric for buying lows. We can compare this to price, and price in the red here, MVRV in the green. You can see anything sub 1 has been basically the bottom. Now it might take a year, 6 months to stay in that bottom, but historically that's been a good buy. Another oddity, you know, MVRV didn't quite exceed what it has in the past. Coin days destroyed, which are older coins moving, kind of unhodling. It's the unhodling metric. It's older coins finally being sold, basically. Now we saw peaks in 2017. We saw peaks in 2018. We saw a peak in November 2020, which was weird. That was way before the all-time high, and this may have been that big miner sell being influenced by this. Coin days destroyed. So every day that after a coin is created, or it's held in between transaction times, it accrues days, right? Coin days. Anytime it moves, then those days are destroyed. So anytime an older coin moves, you're going to see a bigger spike here. And in general, you don't move coins unless you're selling them. So it's a lot of reading into this metric, but we didn't see a big spike up here in coin days destroyed. So this isn't newer holders moving coins, and we can look at that a different way on the hodl wave. So each coin has an age since it's last moved, and historically 50% of the chain has been moved in the past 3 to 6 months once we hit a top in price. We didn't even get there. We got to like 37%. So a lot of this toppy stuff was from newer coins being bought low and sold high, basically, right? Like, you can't fault people for doing that. We almost went up too high too quickly for anyone who got in a big way. You know, the rougher people, they made like $1 billion. Any institutional buyer kind of got in above 10 and sold between 50 and 60, but not a lot of unhodling in aggregate relative to what we've seen in the past for those all-time highs. Here's exchange reserves, another thing you can watch. You'll probably get 15 different answers from 15 different sites, but exchange reserves had been increasing on those lows and are starting to top, it looks like. So exchange reserves decreasing here as we're falling lower. So a bit of a bullish divergence on that. But ultimately, you want to see reserves decline at this pace, right? This July to November, this is a massive accumulation in that period of coin moving off exchanges. Not so much a distribution here even on the top relative to reserves, but there's a lot of ways you can read into that. Here's GBTC premium, again, just looking at all sorts of ancillary stuff. GBTC premium reached negative 20% on a close. It's discount rather. So it's increasing to negative 7%. Is that bullish? Is that bearish? I don't know. But to see it go back to zero would probably be the best case for spot Bitcoin. There are reasons that it was highly positive. There are reasons that it went negative due to locking, unlocking, cash and carry. Not necessarily people who were bullish BTC. They were bullish on their ability to kind of arb the difference between the premium for this product versus spot. Something else we can look at is global OTC volume. This is Paxful and local Bitcoins, also declining since January. You can see where it got in December 2017, how we just kept increasing. This may never reach those levels ever again because we have many more global exchanges now, but it's another metric to watch for just kind of retail interest globally is still waning, at least on these OTC platforms. And then Google Trends is also, much like everything in crypto, down pretty significantly from all-time highs, not all-time highs, but multi-month highs that we hit in mid-May. So nothing fundamentally too bullish right now. As I hinted, I think at the beginning, here's really the only thing I've been watching on low time frames for technicals is this downtrending Pitchfork VPVR yearly pivots volume. We started to paint a type of Wyckoffean accumulation, arguably. Is this a spring? I don't know. As long as we're in this bearish Pitchfork, we're just going to keep filling it in. We need multiple closes above the Pitchfork. We got so close. You know, I bought on Enzyme here, somewhere in here, right? So it looks like I bought the top and sold the bottom. We're having these plus 25, negative 35% swings over a week. It's just brutal. But if you're trading the range, you're doing well, right? You're buying here, selling here. You're just doing that over and over again until we break the range. I was confident enough that we were breaking the range here, which is why I was trading it as a breakout continuation. But that got denied and then just dumpster fired very quickly. Here's all the volume. It sits around 37K. So that'll be the first signs of life. Once we start getting closes above this zone between like 35 to 38, great. Once we close above the bearish Pitchfork, great. And once we ultimately cross above 40 to 42, then I can start to get more bullish on low time frames. High time frames are unanimously 100% bearish. Something else you'll want to see is volume pickup above 42K. So if we start with the bearish stuff on high time frames, first of all, Bitcoin longs, BTC USD longs, almost at an all-time high on Bitfinex. So that's scary to me. I don't think we can bottom with longs at an all-time high. Maybe I'm wrong. Shorts near an all-time low, just sort of cruising. There was a big short that opened up and already closed, and longs just keep adding. So I wish them luck. I'm just concerned for the market in aggregate as these longs get higher. It's never great when you see the long squeeze potential like this. If we pop on a Pitchfork from 2018 to present, basically, we were cruising above the midline, and it looks like we're about to cruise below the midline. So that's certainly bearish. Everybody's looking at these two prior highs. That paints a zone 14 to 20, let's say. That's significantly lower than where we are now. And the Pitchfork kind of agrees that that's a good bottomy area. RSI is also still trying to figure out whether or not this thing can flip bullish or bearish. We are painting the beginnings of a bull div, but at the end of a bear market, you really want to see the opposite curvature. You want to see multi-month bull div. So as this likely goes lower, you'll want to see us throughout Q3 into October start to paint higher lows on RSI. And VPVR is also telling you there's virtually no support between where we are now and 14 to 20. I want to be bullish just like everybody else, just I don't see it. Here's the MA multiplier. This is the 2-year MA multiplier. Historically, green is the buy zone, red is the sell zone. We didn't quite get there this go round. Again, another weirdness, oddity, where we didn't get this massive warning signal at the top. Buy zone is sub 19K, again agreeing with the Pitchfork here, that It's good to become a buyer again based on this metric below 19. Here's the weekly 20 SMA, super simple. If we're above it, we're bullish. If we're below it, we're bearish. We've been below it for a couple weeks now. RSI broke below 50. On the weekly, historically, it doesn't really stay below the 50, but you can't really get bullish until we're back above the 50 again, and it's got a long way to go to get oversold on the weekly. So that's something to watch for. 5200 death cross happening today or yesterday or tomorrow. It's here. Historically, you can say it hasn't really meant much, but everybody's looking at it, and it's certainly not adding to the bullish camp. The weekly cloud, the Kijun here, we've dropped below that now in a big way. So we've kind of lost the last high time frame support, and now we're just going to kind of float around somewhere on the weekly chart, which is never good. It's easy to drift through support or resistance. It's much harder to spike through it. So the fact that we're drifting through this is certainly not bullish for a support mechanism. And on the weekly, much like May 2018, we aren't really bearish on the weekly until mid Q3 if we fall below the levels there. So it's not like 2018 levels of bearishness, but it's certainly not 2017 levels of bullishness either. Daily cloud, we're below that pretty significantly. We are painting this like growing bullish divergence between the TK lines here, the red and the blue. Again, here's that RSI growing bullish divergence. I just don't think that's enough in the near term to move the needle. But ultimately, this wants to mean revert back to 45. So we could be at 45 and still be bearish on the cloud. So that's not good news. If you're bullish, here's the alligator fractal. Alligator is the 5813 MA, and it's still crossed bearish. It tried to cross bullish, failed. Tried to create some bullish fractal prints with higher highs. We failed pretty significantly, and it actually called for a re-entry on a short at around 35. And the next short re-entry is going to be around 28.8. So again, not bullish. And here's the weekly alligators flipping bearish, just starting to. And you're getting, not only did you get stopped out up here at around 47 based on the fractals, but you're getting a short entry signal on the weekly at 28K. And you can see how that looked in 2017. If we're breaking above these fractals, it's telling you to add to a long with alligator that looks like this. If we're breaking below these fractals, it's telling you to add to a short. And the trailing stop loss would be a green fractal, which we haven't even printed yet, but will likely print at around 41. So I got nothing really good to say this week or this month, really. Q3 historically has been not so great. So maybe we can turn it around in October, a few months from now. Lastly, I'll just mention the ETH-BTC fund and the DeFi portfolio I trade for Techemy Capital on Enzyme.finance, a non-custodial portfolio management tool. You can send ETH or USDC to either of these or just watch what I'm doing. You can see all the trades I make, all the deposits, the withdrawals. You can see where I'm trading this. You can see me moving in and out of lending products, allocations, AUM, performance, all that sort of stuff. And the DeFi portfolio, as well as the ETH-BTC fund, both are basically 100% Aave right now. I do have the Aave USDC. I do have the ability to short this stuff through SNX, but I haven't been confident in the platform lately and the fact that it's just kind of collapsing. So that method is just on hold in the near term, but I do plan on looking to use that. If we do go from 33 to 20, you do want to be short for that, obviously, right? Pretty decent trade in that regard. So that's all I read this one. Like, dislike, comment, share, subscribe, and happy trading.